Before we get into the 10 stocks that you've asked us to have a look at, I choose a stock of the day. Pretty quiet day on the corporate front, but I thought Gold Road could be a stock to have a look at because the company flagged this morning production at its Gruyere mine in WA would come in between 52 and 55,000 ounces in the June quarter, lower on its previous forecast due to disruptions to processing, including a torn mill feed conveyor belt which halted operations. Looking ahead, the company tipping gold production for the full year to be within the lower half of guidance. Francesco, Gold Road often comes up as one of those preferred middle tier to lower tier gold miners at different stages here on the call. What did you think of the announcement and the stock at the moment?
Yeah, look, disappointing announcement. Markets treated it a bit harshly as well. So, the share price has, I suppose, dwindled over the last couple of weeks. Our analyst has a positive recommendation on it at a buy level. But I'd hold back on that at the moment, particularly after that announcement of the downgrade. You look there, they're looking at their guidance for the full year now at the bottom end of their original guidance. So, if they have another bad quarter, that could mean that they've got to readjust that whole full year guidance, which obviously affects their earnings. Their costs of production, I would suspect they outlined them there. They're relatively high, but not all that high. But that could increase them as well, particularly when you've got mishaps in the plant. So I'd be cautious there, despite our analysts having a positive recommendation there.
Okay, so you'd have a hold on Gold Road at the moment?
Yeah, personally a hold. And look, this has only come out today, so we haven't seen anything come out from our analyst on this one as yet, but I would expect something tomorrow.
Okay. All right, David, what do you think of Gold Road?
Yeah, very disappointing production announcement this morning with the slightly lower production, but mostly, as Francesco said, the cost side has escalated. So you can see there's cost pressure starting to arise, which is inflationary, of course, within the mining industry. So you're seeing a lot of cost pressure there and wages going up. So that was the main impetus for the rise in cost, plus the maintenance, the breakdown with the main processing plant, obviously was a reason as well. But their forecast is 260,000 to 300,000 ounces for this calendar year. With the all-in sustaining costs is at the higher end. It's of the range, which was, when I was just reading here, between 1,325 and 1,475 Aussie dollars for all-in sustaining costs, which is up from $1,225 to $1,350. So, quite a percentage increase. So I'm like Francesco on this one. I would be avoiding it or switching out of it, actually. But this is what's showing up now. I expect this will show up in the sector. Is you're going to start seeing price increases or cost increases as a result of high wages. So personally, I'd be switching after this announcement. This was one of my preferred stocks in the gold sector, but now after this report, I would be switching to other gold stocks.
Okay. In that band, what are the alternatives? What are the ones that you like in that mid-range band?
Well, Westgold Resources looks pretty good, but look, I like Resolute. They're West Africa, Mali. I know there was some political upheaval, but that seems to stabilise now. But look, they're lower costs, higher margin. They've had their issues, but they're generating very strong cash flow. So I would be looking at Resolute. There's Medusa Mining, which is a smaller, 95,000 ounce producer, but Resolute's 375,000 ounces. So they're getting very good costs on their margin. So that would be, and Westgold. Those two I would be. I'm waiting for Westgold to have a look at their production numbers before I buy into that one, just to see what their cost pressures are looking like. But
David, because you've got Gold Road coming out cost pressures. James Hardy the other week said we're seeing cost pressures. bit of a theme of our major corporates now, whether it be mining or building materials or manufacturing. Reserve Bank says it wants to see wage growth, double, around 3% what it is at the moment. Just store this in the back of your mind and start going, this is becoming a theme. Maybe inflation is coming back.
Oh, absolutely. This is, you've got to be worried about these cost pressures, and for, withstand this. Can you hear me? Sorry, I think I just cut out.
Yep, you're good now.
Yeah. So just I think passing on those that's going to cause some, cost pressures for, manufacturers and retailers, and so can the consumer withstand those cost increases? We'll wait and see, but certainly it's going to put some pressure on interest rates to rise. I say sooner rather than later, in my view.
Yeah, that sort of things appears to be a bit of a theme starting to spring up at the moment, even though our central banks are going, oh no, there's no inflation pressure around at the moment. You're just starting to see these major corporates talking about it, and that if that does become a trend, and the reality of the situation, maybe central banks, and particularly our Reserve Bank, will need to start rethinking the timetable for increasing official interest rates.